So it's currently 10th of February of 2024, and I'll be doing the review for EU the past week, which was week 1 of February. I'm mentioning week 1 not as the best, not Passover, but Bridge Week, which is the week that, which was this week right here, where Price made a bridge. That's why I mentioned sometimes as Passover, but Passover is an event. But now I changed to bridge week, where we have a bridge between between January and February. With that, I'm going to start on DXY. I'm going to make it not fast, but fast enough, if that makes sense, because this is going to be about this this week. As I'm going to show you, was not a big week, not the usual week with the usual news. We only had the Monday 10-hour news USD, and then on Thursday we had more news events. So that's why this week was currently a different week than usual. It's also week 1 of February, and so on, so on. So there's there's some things that need to be studied, but there there is a reason why these weeks, week 1 and week 4, usually don't deliver how we want. With that, I'm going to start on the XY. On the XY, I can easily see the weekly candlestick reaching into these highs, which I was looking already. And I was looking for Monday, not for Monday specifically, but I was looking for the first weekly half to reach and to draw into this fair value gap CB to basically draw into this drawn liquidity. I had the level noted, but then I took it off because there was no need to be more in the chart. So I will just. Oh, why is it not working? Current interval and below. Okay. So this was the draw on liquidity, and I was looking at the price to reach into those. Now, the first question is how and when. That is answered by basically the whole week, where Monday delivered price on the upside. So we have Monday opening. This was last Friday. This was the previous week, bridge week Friday, which created this turtle soup followed by an expansion. And then we had Monday immediately deliver into the draw on liquidity and then into this intermittent MI slash CB right here inside of the monthly CB. So from the monthly CB we have this weekly highs, also 2 week, and then on the daily we have this CB more more bulkier and with a bigger gap, which was a very nice draw on liquidity for today. So we had Monday opening, expanding on the upside immediately, trading into the drawn liquidity. So if I was wanting to trade and wanting to see price continue on the upside, then I will want to place myself on Monday, because would I want to place myself in Monday if the rule of thumb is that Monday is usually the accumulation, then Tuesday high of the week, and then Wednesday and then Thursday the low of the week. Why would I place myself specifically on Monday, trading Monday, and not trading Tuesday or Wednesday or whatever? First, you have the news event. So the news event is the first thing you're going to look at. Of course, that the charts tell you a lot of movement, and sometimes you don't need to look at the news to try to predict price action. But the first thing that I saw was that Monday had news. That also was a confluence between the Friday expansion, because like I remember on the previous week, Friday made the weekly low and the weekly high. So we had the accumulation, and now we had this price delivering outside of the accumulation slash consolidation, meaning that we are now in the expansion profile, expansion on the price delivery. And if you're in expansion, you want to continuously see higher prices, especially if the expansion is into a monthly drawn liquidity, and we had that on Monday. The only problem is that on Monday we can see that we didn't have a Monday reversal. So the Monday low, the Monday reversal in direction of the Monday into the monthly drawn liquidity did not happen. And we can see that immediately after the weekly open, price delivered on the upside and draw up into this monthly high, and then even higher into the daily drawn liquidity after then making the high of the day and then trading lower inside of this range, if I may say so, taking out the monthly, trading below the weekly open slash monthly open and making the monthly low on Wednesday. This was then followed by Thursday accumulation and then my Friday inside candlestick. I can also see, just take some of these things off. So dividing the candlestick into now the days. So we have Monday, followed by Tuesday, Wednesday, Thursday, and Friday. Remembering that the DXY has one additional 12-hour candlestick, which is only 2 hours because of the 17 opening, and then on Tuesday we have the 19 opening. But we can see that this is the half of the week. And on the first half, like I wanted to see, I mentioned on my notepad that I was looking for other person on the first half because of the Friday turtle soup slash previous weekly range, and that if we are an expansion and price to continuously delivery on the upside. We have to consider to have the Monday daily candlestick with the first 12 hours, second 12 hours, and then this muted candlestick, which I will not be referring to. So let's say that the XY is only this candlestick and this second half. Immediately after the opening price continues on the upside and then creating a trending candlestick, and on the second daily half we expand on the upside. On Tuesday the idea is different, where we have the first Tuesday half making this accumulation slash range candlestick, and then on the second half of Tuesday we have price turtle swooping the 12-hour high, so turtle swooping the first half daily high, no, first daily half high, and then expanding lower into this daily half low, reaching into this 12-hour CB. This then followed by Wednesday, continuously delivering on the downside, creating this small candlestick, and then closing the first half on the first daily half of Wednesday, and then on the second daily half of Wednesday, price made the weekly low, trading below the weekly open, making this weekly low, and then we expanded on the upside back into, and then we consolidated basically on the rest of Wednesday. Then on Thursday we have price opening, retracing lower into the weekly open once more, which then delivered price on the upside. So on Thursday the daily low was made on the first half. So the Thursday low was made on the first half, and then the daily high slash Thursday high was made on the second half before price trading lower and closing. This then seen on Friday creating this inside candlestick with the first half making the high and then price delivering lower on the second half making the daily low slash Friday low back into this weekly open once more and trading below the creating equal lows, I might say so, below the first half of Thursday. On the 8 hour I can now see and and not see, but view the candlesticks as divided in three. So instead of dividing the candlesticks in half, I'm because the daily it's divided in half, making two halves. So now we're viewing the candlesticks on thirds. We have the first third making the low of the day uh, for Monday, and then price immediately delivered on the upside. We can see that on Tuesday we have the middle third, so the second third make the high of the day and then deliver it lower. So here we have like a three candle model with accumulation slash consolidation manipulation, making the high of the day for Tuesday, and then expansion, which starts after the manipulation and the high of the day being validated or being on placed, and then price delivery on downside. Not the same thing, but somewhat close. With then the Wednesday first third delivering lower, second third which was between 3 and 11 making the low of the day for Wednesday, then price trading on the upside where on the third of the Wednesday candlestick price just greater than inside candle. On Thursday we have the first third make the low of the day, delivery higher, making this high of the day on the second third of the day, and then this is followed by an inside candlestick on the third of the Thursday candlestick. On Friday, you can see that even in an inside candlestick, we have the middle third, so the second 8-hour candlestick make the high of the day, which then followed by making the low of the day, and then on the third 8-hour candlestick of the day, we had price consolidating. On the 4-hour chart, which is one of my best charts, and 1 hour, I don't use too much the 2 hour. It's actually not something that I view as useful. 2 hour. It sometimes is. It depends of the person that is trading. Depends on what candlesticks you like, but I don't usually like. But on the 4-hour candlestick, I can see that we have like the Monday expansion. So inside of Monday, I can also divide the candlesticks on half. So if I come here, we have 1, 2, 3, making the first daily half. Then we have also the 1, 2, 3 here, and I can see what on Thursday, Wednesday, Tuesday. Sorry, I can see that even that we had this Tuesday I made on the second half because it started here. We have also the I of the day made on the second third because it was between 1 and 9, which is the second 8-hour candlestick of Tuesday. And I can now see that it was the fourth candlestick of our 4 hours of the day, meaning that it was, if this was EU, was between 5 and 9, but it's because it's DXY, this is between 3 and 11. 7 and 11, sorry, between 7 and 11, because 8-hour candlestick is in 3 and 11. So I'm just dividing the candlesticks now on that half. So I divided the week in half. Now I divided the days in half, and I can see that the weekly half of um, of the week is also the Wednesday half as well. Same thing here. Half. We have the first 3 4-hour candlesticks making 12 hours. Where in the first daily half we can see this first accumulation, manipulation, distribution, and then same thing here where price on the second half made the high of the day and then retraced lower. Same thing on Friday, sorry, where Friday made this candlestick. Isn't seen because it's this 7-hour 4-hour candlestick is not sure is above the line, but we can just count. It's really easy. 12 hours. It's 4, so 4 batch 3 equal to n. So 1, 2, 3 first half, 1, 2, 3 second half. We can also count the 8-hour candlesticks. So 1, 2, first 8 hours, 1, 2, second 8 hours between 3 and 11, then 1, 2, 8 hours which are between the 11 and the 19th. In this case, it's 17. On the on the hourly candlestick. On the hourly candlestick, I can see that eye of the day was made on Monday for EU, for DXY, Monday eye of the day, which was made on the second Monday off, so better than it. Let's just make it more reasonable if I say. So weekly eye, first weekly off is also the Monday eye of the day. It was also made on the second Monday off, second daily off, which is the Monday. It was made on the third 8-hour candlestick. So the third slash 8-hour candlestick. No. Yes. I don't think so. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. It wasn't made. It was 1, 2, 3. 1, 1, 2, 1, 2, 1. Okay, it was. Because it's Monday, so it's different. Let me just. Yeah, it was. It is correct. It's just then different once when Tuesday starts because 17 starts the candlestick, meaning that half is 5, but then on Tuesday 19 starts the candlestick, and then it's 7, the half, and then that changes the time cycles. But third 8-hour candlestick, and if I'm not wrong, if this was made on that, it's the 6/5 4-hour candlestick, which is between 9 to 17, no, 9 to 13. And inside of it, the iframe is 10-hour, 1 hour after day. Same thing on the low of the week. What can I see? I can see that this is the weekly low. It was made on the second weekly off, just based on this. I can also see that it's a Wednesday low of the week, Wednesday low of the day, as the second reversal, because this was the first reversal of the day, making the open, if you view it as the candlestick opening price, making the open high, low, close, and this was the second daily. So I'm going to mention also this. So this Monday after day was the second reversal, second daily reversal, and this was also the Wednesday of the day, which was also the second daily reversal. It was made on the second daily off, also true, because it was made also on the second weekly off. I already mentioned that the weekly off is the same as the Wednesday off. And then it's also on the, now it's not on the third, but it's on the second second third slash 8-hour candlestick. Neste caso agora das três, which can, fuck, uh, where in this case now it's made from 3 to 11 because now the time changed. That's really confusing. I think I'll just start using like this, something like this. Like I'm just going to start using from 8 to 19 or to 17 in everything, and then fake it. Then on smart 0 to 17, 0 to 17, and so on, so on. But back to it now. It was also on the fifth 4-hour candlestick, if I'm not wrong. No, it's not. It was on the 4-hour candlestick because it was on the second half of the 8-hour candlestick as well, which is between 7 to 11. And it was made on the 8-hour 1-hour low. And this is basically it, how I can uh, fractalize the time and candlestick and time frames between the eye of the day, eye of the week, and the weekly low. That's basically it. I also do the same thing for the daily candlesticks where I try to fractalize. So this is the daily low. Then I go lower and lower and lower and try to find some pattern or something that can say to me, okay, this is good to have in your model at this time period slash duration slash which type of candlestick, etc. etc. So this is basically it for the DXY, and from this idea, the only high probability idea for basically the this candlestick was the biggest move, and the biggest move was trying to catch this turtle soup into the draw on liquidity. I'll be mentioning that this is the draw on liquidity, which was that I that I mentioned daily chart. So this was a 4-hour trade, and after it I'll be done. No need for keeping looking. You also could try to look for this Tuesday eye of the week and then lower the prices. But on the second half of the week, there was no need to try to be in the charts. So same thing with this order block here, so order block. You can place your stop loss here. And you would believe that price was going to trade higher into the drawn liquidity. Here could be a first partial at these highs. And then, as we can see, for almost 2 hour for a partial, you can then add another position right here on the second daily half, where on the second daily half for Monday, I can see that price, let me just put this, what can I say? I can see the price at the Monday half, so we opened the second Monday half, price consolidated, retraced lower, and then reversed for the second daily half, which is a continuation of the first daily half, a continuation of the day. And price expand, 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 and made the high of the day. And that's basically it. Now I'll be going for EU. So now on EU, the first thing that I can see is that EU did not match the DXY purge. So in DXY the monthly was pretty not pretty purged above, and price traded into it and through it, reaching also into this other key point. But on EU price made this accumulation, and after reaching into this monthly low, which is shown as the December low of the month, price now consolidated a little bit. So instead of the purge that the XY saw, we saw this small wick. This very with one pip, basically one pip of sweep below this monthly low of the month. So technically we traded inside of this busy, but I'm looking at this busy and I'm not expecting it to be held in some sense. I'm expecting it to be broken, but this is not meant for it right now. But we can see the difference on the candlestick, where we had a choppy candlestick, So on EU, while price created equal lows, on GPP price traded into the rejection block and then uh, rejected away from it, coupled with this fair value gap, which price also dropped lower into it. But it's not like it rejected from the rejection block, but it's more like it created more sell-side liquidity with these equal lows in GU and in EU. So just a little talk is that we had price consolidate and expand, and right now only two things can happen, which is we have a retracement to then continue this expansion, going a little bit higher, where I believe that this is a very high likely point of interest, which is the 6 month premium week consecutive encroachment in close proximity to this opening price. So I still believe that we have a little bit somewhat of a more upside movement, which means that EU is likely to continue lower. I believe so, and we are also on the almost on the half. So this is the first Q, the Q1, and then the next week 2 candlestick is going to form the first half of the first quarter and then the second half of the second quarter. But going to this week, what can I see? I can see the same thing once again. So there's no need to try to debunk that trading this Tuesday low of the week into this Friday of the week was a good idea. It wasn't. Not close to it. The good idea and the best trade idea, in my opinion, for this week was going to trade the Monday daily candlestick. So everything past Monday, from Tuesday, Wednesday, Thursday, and Friday, everything was for me an ignore zone slash non-interest zone, time range, whatever you wanna call it, because Monday delivered on downside into my drawn liquidity. And after a drawn liquidity started to price sometimes gets a little choppy, as you can see on this small candlestick. So notice our the Monday candlestick, the Monday body is basically the entire body of the of this next candlestick. So then we have, what do I mean by this? Is to not get confused and again go to the next point. Is that Monday open to Monday close, then we have this body range, then we have the Tuesday, Wednesday, Thursday, and Friday basically make the same body in 4 different candlesticks. So this means that Monday was very directional bias and trending in one simple direction. So Monday was the highest probability day, and I wasn't synced with that because I was expecting Monday to make the high of day, then reverse lower and continue this expansion from also the previous Friday on week 0, which was the bridge week between January and the bridge week between January and February. On the 12 hour, I'm pretty much, I would not say non-interested, but it's also good for the study. But I'm more focused on this Monday candlestick, which was basically the candlestick that I would want to be part of, the daily candlestick that I would want to trade, because I know that's in the direction that has enough confluences that is going to be high probability. And this Monday was going to be high probability because of the news and everything from the Friday expansion and so on so on. So that's how you call and you can expect on a Monday is going to be accumulation and on a Monday is going to be a day that should trade. In this case, everything was indicating to me that Monday was a day that should be traded. So the first thing that I can see now studying the week and not daily candlestick, because daily candlestick was not the weekly high, neither the weekly low. I can see that we have Tuesday. First, this is the weekly low. There's this Tuesday. Uh, this was made on the first weekly half. It was made the Tuesday low of the day, and it was also the Tuesday second was the second daily half slash second daily reversal. How can I see that? Because we have Monday, then we have Tuesday, and on Tuesday price created a bullish candlestick, as we can see, but the first reversal was the eye of the day into this fair value gap. Then the price traded lower, so this eye of the day expanded and engineered this run lower as a continuation from Monday, made the low of the week with this small turtle soup with not even one pip also, 7 pipettes, and then price expanded on the upside. So the low of the week, sorry, this Tuesday low of the week, as I mentioned, this weekly low on the first weekly half, the Tuesday low of the day, was the second daily reversal. It wasn't the first daily reversal and then price expanded on the upside. It was the second daily reversal for price to cap the low of the day after the high of the day have been made, and then it delivered on the upside. On the inversion part, we have the weekly high, which was made on the second weekly half, which was made also on Friday, high of the day, and it was also the second daily half of the candlestick, where Friday made the Friday range from low to high was made on the second half. And you can see that it was the second daily reversal as well, because first price made the low of the day for Friday, trading below this Thursday previous day low. No, sorry, trading below this Friday first half low, and then price expanded on the upside, making this weekly high. If I made not a drawing, but let's just say that this is the weekly open, right? Weekly open. We have the Monday candlestick, then the close, followed by the Tuesday candlestick. I'm going to make a little bit of a purge, which closed right here, followed by the Wednesday candlestick, then the Thursday candlestick, trading above the Wednesday high, trading also above the Monday high, making a new high of the week, which then delivered lower and closed higher, and then this Friday trending candlestick, making the high of the day. I'm just going to short this Monday high, also this one. But so this is basically the entire day weekly candlestick, weekly open, weekly close. I just have to a little bit more. We have Monday candlestick. We have also the Tuesday candlestick right here, making the low of the day on the second half, followed by the Wednesday candlestick, followed by the Thursday candlestick, which is a little bad done, so I'm going to make it more fitting. The Thursday candlestick, and then the Friday candlestick. So this is the Thursday low, Friday high. We can see that the second reversal of the day, because the first reversals to make the high, second reversal of the day on Tuesday made the low of the week. The same thing here with the second reversal of Friday made the high of the day, which is also the high of the week. We can see also that Tuesday, which was price making a new high of the week, price made the first reversal of the day for Friday, for Thursday, making this high of the day. then delivered lower into a discount of the Tuesday low to this Thursday high, and then price on the second daily reversal, right? Because this reversal like this, so the second, so first, second, first, second, first, second, first, second, first, second, first, second. So to make the low of the day, which was the second reversal after the high has been made, it was actually the discontinuation turtle soup, and this was actually a continuation of the weekly low. So the weekly reversal, expansion, making a new high of the week, retracement, to then continue the weekly expansion, making the Friday high of the week. That's a quick drawn, if I say so. On the 8 hour, the same thing, which is now dividing the candlesticks into thirds. So now I have, instead of halves, I have thirds. And you can say that most of the times the second third, which is between 1 and 9, makes the most of a daily candlestick. So this is the place that you want to put yourself if day trading. You want to put yourself between 1 and between 9. Between 1 and 9 again, and 9. Between 1 and 9. Between 1 and 9. Between 1 and 9. Especially in this weekly one candlestick, this week one, which was a range candlestick. Now, what I can see that the eye of the day was made on the third, third slash third 8 hour candlestick, which means that between 9 and 17 price made the weekly high, and on this case on Tuesday, it was made on the second third, which is the second 8 hour candlestick. By now I can already say that this low of the day was made on the fourth 4 hour candlestick because the second daily half only starts at 5, and the second third candlestick only starts at 1 till 9. So I know that because the second daily half only starts at 5 a.m., so between 1 and 5 everything cuts off, and then after 9 to 17 everything cuts. So this loft day, loft the week and loft the day was made at the 4 hour candlestick, which was the 4 hour candlestick, which ends at 9. And I can see exactly why how could I know that? Because I knew that price made the um, first daily half. I will just make the drawing and then I will explain. So this is the first half. 1, 2, 3, second half of the day. Half. No, not here. Uh, half. And again. Other half. With that, what can I see? Uh, Going back into Tuesday, what can I see? I can see that it was made indeed between 5 and 4. Because what? I know that the law of the day slash the law of the week was made on the second daily half, which is between 5 a.m. and 5 p.m. So the second daily half is between 5 a.m. to 5 p.m. 5 a to 5 p. I know that the second, third slash second 8 hour candlestick is made between 1 a.m. to 9 a.m. So it's just simple math. So because the second daily half it's 5 to 5, Then 1 to 5 you cut everything. So between 1 and 5 the first 4-hour candlestick it's cut, so it doesn't matter. And I know that between 9 and 5 p.m. Nothing matters because it was made on the third second hour, on the second 8-hour candlestick. So this means that then it's made on the 4-hour candlestick, uh, which is the 5 4-hour. So you can see the Monday reversal trading lower, we can see the Tuesday, we can see the weekly half, which is also the Wednesday half, we can see the Tuesday as well, and we can see Friday, which is not shown because price is made that candlestick. Now, right here, I can also say that because it was made on the third half, the third hour candlestick means that was made between 9 and 17. In this case, because I'm looking at it, I can simply say that it was made on the fifth 4-hour candlestick for the daily chart because 1, 2, 3, 4, 5, it's the fifth, and it was made between the 9 to 13. So it's a 9 4-hour candlestick. Now on the hourly chart ending this study. Just need to make the candlesticks a little bit eager. I can see that it was made, so we have the 5th, the 6th, and the 7th. So it was the 7th, not the 7th, but if I count between 1, 2, 3, 4, it was made on the 7th. 1-hour candlestick, the low of the week, and the high of the week was made on the 9th 1-hour candlestick. So that's basically it. My idea for this week was also on the first half. We could catch something like this. I was aiming at this turtle soup on Monday, which didn't happen. We left this 8-hour CB open on Monday, which I was expecting price to turtle soup at it before going lower. But a good idea is also seeing the bodies entering at this order block, for a stop loss above the order block, and then expecting price to trade lower as the inversion idea from DXY. This was basically a very good idea for the for this day and for this week, and then everything from here is just a waste of mental capital in my idea. It's just no need to try to trade the second half. If the second weekly half, if the first month weekly halves reached into your and draw lower into your monthly slash draw liquidity that you expected, so there's no need to try to trade after a draw liquidity has been reached. So that's basically it. I'm just going to take a screenshot, and here we have an SMT which shows weakness, so DXY in GBP. I don't know if it's an SMT or yeah, we have SMT. No, we don't. But we can see Monday reaching also into this liquidity void after the new week opening gap and then trending away and expanding away from it on GU. Price actually didn't turtle soup, but it reached in this also the 17. We created this where the eye of the day was made at 3 as well, but we have this like not 3 candle model, but we have this swing eye formation. before going low. So there's no SMT, but this shows weakness on the charts. This gap staying open and price only rejecting from this order block. After this turtle soup at the 3 o'clock, so between the London time zone, London the session, and then price just expanded lower as a daily day trade, where you want to hold your trade until 9 or 10, where at 10 price reached drawn liquidity, and that would be a good trade for this week. So that's it. Have a nice week, and it's all.